In the previous chapter, you saw the income statement of Cashbuild. You also saw how profit is calculated, gross profit and net profit, and also how headline earnings is determined. Now we want to look at headline earnings per share, because that is a very important number. It is used to calculate price earnings ratios, which we'll do in the next chapter or so. Headline earnings is basically the earnings of a company that's on a sustainable basis. So they strip out non-recurring items and once-off items, which is why the market looks at headline earnings more than earnings per share. So the calculation is quite easy. You basically take the headline earnings or profit of the company. If you go back to the income statement, you could see their headline earnings from continued operations is 265 million. These are in thousands, so that's 265 million. And you divide it by the average number of shares in issue. If you again look at Cashbuild, the number of shares in issue is 25 million, but the weighted average shares in issue over the period is 23 million shares. So if you divide 265 million by 23 million, you'll get 11.44 Rand headline earnings per share for Cashbuild. So that's very easy. The next chapter just quickly tells you about dividend cover. Not the most important aspect, but the calculation is very easy. Headline earnings per share, which we calculated at 11.44 Rand, divided by the dividend per share, which was 5.28 Rand. And that gives us a dividend cover of about 2.17. What is important in dividend cover to remember is just that some companies pay out a smaller part of their profits. Two times used to be the normal sort of dividend cover for companies that grow. So they have to keep a bit of the earnings back to grow the company. Especially you'll see mining companies will pay have an even bigger dividend cover than other companies. A company like MTN, for instance, used to have a dividend cover of about 2, but they are now very close to dividend cover of 1 because they don't need to expand that much and build so many towers for cell phones. So they are paying out most of their profits or earnings in dividends. But that's not necessarily bad or good. Obviously, investors want to see a lot of dividends. If you look further, you'll see that there are some more ratios in the income statement, and you can have a look at them. We're not going to go into detail there, but there are things like the liquidity percentage, return on shareholder funds, return on assets, and quick ratios. You can have a look at that. One very good source is Investopedia. If you go to the Investopedia link, they explain most of these terms and ratios very well in Investopedia. That is all for now. Thanks.